Hey everyone, good day. It's Sandy Casella here from Casella Homes Real Estate, and today I'm talking to Monica Falco from M2 Mortgages at Capital Home Lending. And Monica is our preferred mortgage broker. She deals with most of our clients doing our mortgages. And so we are talking again about just about the real estate market in general, interest rates, and what to look out for, what's happening right now. So thanks very much for joining me, Monica. I really appreciate it. And
Thanks for having me again. I appreciate it. It's always so great chatting with you and catching up.
yeah, amazing. Thank you. So I wanted to talk about, I think now might be a good time to talk about rates. We've just had an interest rate cut from the Bank of Canada, the overnight lending rate, and which then led to drops in the variable rate mortgage. So tell us a little bit about that, why that's important and how it affects, I guess, current home buyers, because it doesn't affect all, or sorry, current homeowners, because it doesn't affect all of them, but how
Yeah.
it affects the real estate market in terms of buyers.
Yeah, absolutely. So, current homeowners, if they are currently on a variable rate product, then ultimately their monthly mortgage payments would either decrease or the principal versus interest within their payment would decrease or change, I should say, depending on the type of product that they have. So, currently the prime rate is sitting at 4.7. I think based on kind of projections and forecasting for this year, like we are where everybody has anticipated us to be, based on forecasting for the remainder of the year, depending on, of course, the economy. I'm not an economist, so I can only go based on what I'm reading. But nonetheless, we are potentially going to be looking at another rate drop by the end of the year. Again, depending on all of the stats and everything that goes into the determination of whether or not the overnight rate will be cut. With that said, I mean, for buyers, I think it's important to know, if you have been pre-approved in the past and you are thinking about doing or going with a variable product, then your stress test is now lower. But just be mindful, of course, if the prime rate has dropped and you haven't updated your pre-approval, then technically your stress test is now going to be lower, meaning you may qualify for higher. So that's really kind of the important thing to note when it comes to current buyers in the market. But yeah, I mean, for homeowners right now, I think they're just super happy that their cash flow is better. I'm sure after a very long haul of the prime rate changes, we're kind of nearing more of a normalized rate market and some stability finally.
Yeah, and I don't think it's going to change drastically, but we're probably where we're going to sit for the next little while, I would think, right?
Yeah, no, absolutely. I think what we're looking at is, maybe a quarter point, maybe another quarter point next year. But again, I don't think that we should be really hyper focusing on any sort of rate changes anymore. I think, that ship has sailed. We're where we are, we are where we need to be and where we forecasted it to be. So I don't think there should be any more kind of stipulation or focusing when it comes to the rates and whether or not they'll be, moving or going up or down. That really shouldn't affect whether or not somebody should be purchasing at this time.
Yeah. So just to clarify one thing. So anyone who has a current mortgage that has a fixed rate mortgage, these rate drops don't affect them. Their mortgage payments stay the same.
That's right. If you're on a fixed rate, you're locking into a specific rate for the duration of your term. So you are not having to focus in on anything that's happening with the prime rate.
Right. So what is the different, what are, what is a variable rate mortgage at, right? Like a 5-year variable at right now versus a 5-year fixed? What would the difference be?
Yeah. So, I mean, the best variable rate product I have right now, which I've just got approved for one of my clients, is Prime -1. So, right now, Prime at 4.7, your effective rate would be 3.7. If we are anticipating another quarter point drop, then your effective rate would be 3.45%, which is incredible.
Yeah.
On a fixed rate, 3.99, just to compare apples to apples. So, I mean, as it stands, I think the benefits, definitely taking a variable rate outweigh the fixed at this time. But just be mindful, of course, if you are taking a variable rate product, you have the ability to lock into a fixed rate at any time in your term. So there's a lot more flexibility on the variable. But again, honestly, I think it's really just based on the consumer and individual themselves, what type of product they should be taking, regardless of interest savings, regardless of forecasting. If there's a low risk tolerance, then a fixed may make the most sense for a client versus the variable. But yeah, there are some interest savings to be had taking a variable right now.
Yeah, I agree. I agree. It really depends on your risk tolerance. And I think that's where a discussion comes in with you. If you're when you're doing the financing to come in, what's your comfort level? Where do you sit? So I think we're back though to, traditionally a fixed rate sorry, a variable. I have a tickle in my throat. I may have to get some water. A variable rate mortgage typically will in the long run, you'll pay less interest. Jerry's talking to me. Never talks to me when I need him. But anyway,
Get some water.
yeah, I think I will. Give me one
Get
second.
some water. Yeah.
Okay. So typically a variable rate mortgage you'll pay less interest over time. I think we're over that hump of that wasn't true for a little bit, right? Because
Yeah.
it was for a little bit, but I think I think now we're back to that where it'll be more beneficial for the variable. And I think it's a lot more, the economy's not stable, but the interest rates I think are more stable now.
Yeah, absolutely. I mean, to your point, historically, variable has outperformed the fixed rates. But just be mindful, of course, everybody who went through the prime rate jumps also benefited from having significantly low payments for a very long time. So it could be that things have just simply evened out. Although, again, shock to the system for a lot of people as well. But yeah, to your point, we're not anticipating any sort of like crazy major changes to the prime rate, just simply because, as you mentioned, like the rates have stabilized. And in that, because of that, I don't think that there is a major risk in taking the variable product at this time. And, a lot of people are leaning towards the variable for that reason.
Yeah. Is that what you're seeing? Are you seeing more people take a variable right now than fixed?
I am seeing a lot of people take a variable product over the fixed rate. I think, again, the major conversations are simply around risk, right? A lot of some clients just simply don't want to even worry about their bank statements, don't worry about their monthly payments. They say, you know what, this is our budget. We don't want any sort of risk or changes. And for those specific clients, I always recommend taking the fixed rate. But there are, having the conversations, supporting the clients with more education surrounding the fixed rate versus the variable rate. A lot after, talks and just like I mentioned, more knowledge. A lot of clients are leaning more towards the variable over the fixed for that reason.
Makes sense. What are you seeing in terms of the market? Because I've seen it pick up quite a bit over the year. I think it was very slow at the beginning of the year, but we've seen quite a bit more activity, I think. Are you seeing
we're seeing the same thing on our end. I mean, I watch it very closely and I'm on the same page. I believe 2025 was started very slow. We saw a little bit of an uptick. I feel like the spring market came late. We saw more of an uptick in the summer, and then a little bit of a lull in August, and then September hit and kids went back to school, and there was a little bit more of an increase in activity as well. I mean, I think I just saw one of my agents posted on Instagram an offer of like 17 registered offers against a property. And I mean, listen, yes, maybe the property was, the price was low. Maybe that's the reason for it. But I think that just itself shows activity. So I think there are buyers out there. And we also have had a lot of past clients come back to us saying, okay, you know what, we're going to revisit the pre-approval. What are the new rates? There's just more conversations happening now for sure.
Yeah, I agree. We had a lot of people sitting on the fence that are out looking and making decisions. So I think things have stabilized a little bit, and I mean this market is not going no matter what happens, this market is not going up drastically in the next little while. We're not going to see those gains simply because of, the jobless rate and incomes haven't gone up in the same proportion as inflation prices. So I think we're now at the point where they'll stay pretty stable for the next little while. So I
I
think it's a
think
good opportunity for buyers. I think it's, or I had this discussion with a seller last week where they said, like, 2 years ago, their house was worth, or a house exactly the same as theirs, they have a townhouse, sold for $200,000 more than it would sell for right now. And my comment was, yeah, but what would you have bought? Like, you also, if you're moving up, you were also paying a lot more money for whatever it is you were going to buy. So it's all the same.
so it's all
It's
relative.
an opportunity now.
Yeah, no, absolutely. I mean, to your point, that's exactly it, right? Yes, property values were maybe higher, but you have to be mindful that, maybe it's 2,000 or $200,000 less now, but you're also purchasing your future property for less, right? So it is all relative. I do think that the market definitely went through well-needed correction after the craze that happened a couple years back. But I do think that, the fear is gone, in my opinion.
For the most part, yeah.
Yeah, I don't feel that hypersensitivity anymore to rates. I don't feel it to prices. And I think that I feel like 2026 will be a hot year.
You do, eh? Yeah, interesting. What are you seeing with people who because I believe this year and next year, a lot of people were renewing mortgages that were ultra low, right? And how are you seeing people weather that storm?
Well, I think it's funny. The majority of the clients that I have had, it's more of a laughter of a situation now. They're like, yeah, the 1.9, yeah, we no longer have that. So the thing is, you have to be mindful that when you are renewing a mortgage, there's a few things that change. When you start the process of the renewal, you can take a look to see whether or not you are originally insured. If you haven't done any refinancing, you may automatically qualify for the best insured rates. And a lot of people don't know that. So the opportunity to qualify.
Sorry, I don't understand that. So if you okay, so can you say that again? So if you
Yeah,
originally took a mortgage that was insured, so
mhm,
insured by CMHC, and now you are renewing it, even though your loan to value ratio is within the like is now no longer high ratio, you still would qualify at the
correct.
insured rate?
That's
Oh, I
correct.
didn't know that. That's pretty interesting because those
Yeah,
are typically better.
exactly. And a
Huh?
lot of people do not know that. Now be mindful. This has to be like a standard charge term. So if you are originally with a bank, RBC, CIBC, all of those guys generally do a collateral charge. So that may automatically disqualify you from this type of transfer. But for all intensive purposes, if you have a standard charge mortgage, you originally purchased your property with less than 20% down, and you have not done any sort of refinancing, then you can absolutely transfer your mortgage to the best insured rate on the market.
Oh, that's pretty cool. That's good to know.
Yeah. So, me having those conversations with people who are renewing their mortgages, a lot of them don't know that. So, realistically, yes, there is a little bit of a slight increase in the interest rate, but it's not nearly as drastic as they may have thought.
Right. Oh, yeah.
Yeah.
Okay. Okay. So that's good. That's good to know because that does make a difference, right? Because yeah, because although you've paid down your principal, now your amortization is also lower. So your monthly payment doesn't change drastically when you're renewing your mortgage unless you are now changing your amortization which is a change in your mortgage.
Yeah. So, just to elaborate a little bit more on that, right? Like 5 years, if you're in a 5 year term, 5 years ago, your rate maybe at 1 point or 2%, let's just say at 2%,
Yeah.
you're paying for a mortgage at 2% for 850,000 5 years ago, maybe. Okay, 3 years ago, just for all intensive purposes, right? 3 years later, of course, you're paying down your mortgage, right? So now your principal is significantly lower. So let's say now it's 750,000, just for all intensive purposes.
Yeah.
Yes, the rate is going to be a little bit higher, But because you're now mortgaging a lower amount, your monthly payments are not going to be nearly as,
Yeah,
different as you may have thought they would be because of a higher interest rate.
yeah,
So it hasn't been, yes, there are some people who have been negatively impacted, but the majority, it hasn't. It's all kind of leveled out. Their payments are generally around the same, if not a little bit less. You also have the
right.
option of re-amortizing if you wanted to bump up your amortization to help those monthly payments. So there are a lot of options for clients. I think the ones that were impacted the most are the ones that had issues with income, maybe some job loss.
Mhm.
Those were the clients who were impacted most when it came to higher interest rates, renewals, etc., just simply because of affordability.
Yeah, yeah, that makes sense. So I think everything's pointing to like a very stable market. Everything's pointing to a good year for 2026, I think. And I think that's good. I mean, I think this the price changes were a good thing. We needed to the market couldn't sustain like that. It just didn't make any sense to me. So I think it will be, you know, a good thing going forward, providing everything stays kind of stable. And nothing else comes out of the woodwork, right? That we, you know,
Listen, I feel like we've all been through the ringer with inflation and tariffs, and we've been thrown a lot of things at us. What I have, listen, the way that I see it is that real estate will never stop. There will always be a reason for somebody to need to move. There will always be a reason or there will be, people increasing their, family size, having more children, maybe needing more bedrooms. Like life goes on, right? And
yes,
for that
yes,
reason, I don't ever feel like there's going to be a crash per se in the
yeah,
market.
yeah.
Um, there might be some changes, there might be some corrections, there might be some movement in interest rates, but you have the right conversations, the right team supporting you. I feel like you will be able to continue on with your plans for sure.
Yeah, I agree. I mean, because there's always things, right? Just like you said, people people get married, people get divorced, kids move out, kids move in, all that kind of stuff. You're having babies,
Yeah.
whatever, downsizing. So there's always a reason to move for people. We're just not seeing the frenzy about moving, I think. So I think that's part of where we're at. Most people that are moving right now have a reason for moving, right? There's
Yeah.
something going on.
Yeah, the
So
people who need to sell need a reason to sell. But I definitely do think that it's the right time for first-time home buyers to just get out there.
yeah, I agree. I agree. Especially, I know we hear a lot. I want to talk about some numbers in a second that I have, but I know we hear a lot about the condo market and what's happened with the condo market. But I think that's very segmented in terms of the smaller, the much smaller condos that were built primarily for investors. I think that's being more hard hit than other aspects of the condo market. So I think there's some really good opportunities. The condo market is going to continue to come down, but I want to go over some numbers in a second because it's kind of surprising how far sales have come down, but the prices really haven't followed suit yet. And I don't know if they will at some point, but they really haven't come down in proportion to the drop in the number of sales, which is typically what we would see, right? So I think there's some opportunity there for first time buyers for sure. Even if you're not, if you're going to not plan to live in there forever, get yourself into the real estate market, build up some equity, that kind of stuff, and then use it as leverage later on down the road. I think there's a real opportunity there.
Oh, absolutely. I mean, just even being mindful of the equity opportunity. If you purchase something now in the market that we're in, perhaps may be able to purchase more of a distressed sale. And automatically a couple of years down the road when maybe things level out a little bit in the condo market, who knows how long it will take, but that's automatic equity that you'd be able to take and move on to the next property if you need to upsize, right? So I absolutely agree with you. I do think there's a lot of opportunity right now.
Yeah. And you know what? I mean, if we look at the condo market, so what's happening is the condo market, a lot of the new projects have been canceled, and a
Okay.
lot of or put on, either canceled or put on hold. So the condo market has, the new homes construction in general has been halted almost, right?
Mhm.
Halted. But what is going to happen is at some point, the market is going to recover and we're not going to have enough properties again. That's what's going to happen. And then the prices are going to jump up at that point. This is what has happened in each slowdown that we've had, is that the builders have stopped building, and then we have the market pick up, and now all of a sudden they're scrambling to catch up again, and we have a shortage of properties. And that, make no mistake about it, that is going to happen again in our condo market, whether that's 5 years down the road or 7 years down the road, but it will be within 10 years. That will start to happen again. There is no doubt in my mind. So we have to really think about that, and where are the opportunities. So for people who say, or were priced out of the market at some point, now is an opportunity to get back into the market. And the problem is that people get scared and they think that this market is going to continue to go down forever, or it's going to stay this way forever. And it won't. I've watched this for 36 years. I got my license in the exact market that we're in right now, where it started to drop. And over time, it comes back up, and then we have a shortage again, and that's going to happen.
Yeah. So, I mean, you've been in this market, like you mentioned, for 36 years. What would you like if I was a buyer? What would you tell me right now?
I would tell you, if you were a buyer and you were in the market right now, buy the best house that you can buy with the money that you have, right? If that is a condo, then buy a condo. If it, with your income and with your, there's a whole big picture here, right? Where do you need to go to work? Do you work from home, or do you have to commute? Do you mind commuting? Like, where do you want to be that you can sustain long term? Because you want to be able to stay in that property and not feel pressured to move in a year from now. So if you can stay in that property for 2-3 years, if the market goes up and you move in the meantime, that's a moot point. Where can you stay for now? Get yourself into the market, buy something that you can afford right now comfortably, and that you can live in for a couple of years, and then you can move up from there. But I would not hesitate to buy a condo right now. Like, I think if you're a first time buyer and you're in the market, I wouldn't hesitate to buy a condo. I don't
Yeah.
think that market is going to go up at some point. And it's very, very different in the like the outskirts than it is in the downtown Toronto area. Like Milton is different, Mississauga is different. Their numbers are not the same as they are in Toronto. So I would get into the market now. It's a really good opportunity. Rates are low and prices are low. Both are low right now.
Yeah.
You know, if you're taking a variable and they go down, so what? You're going to get the lower rate at that point. You can lock in if they start to go up. You still have the best of both.
Yeah.
You have the best of both worlds right now. What we don't have is buyer confidence. And that's when you should be buying, is when others are not buying.
Yeah.
Buy when others are not buying and sell when others are not selling. That's just the way it goes, right? So I know it's easy for me to say, but I've done it a number of times myself. And I've walked people through that. And the ones who buy now in these type of markets, they always win in the long run. Always.
Yeah. Are you finding that a lot of buyers are also like they don't want to make an offer because, number one, there's too many options, so they don't know what to do, or they think that there's going to be better? Do you
Sometimes I think that is a bit of it. There's no sense of urgency right now.
Mm.
So sometimes, and a lot of it, you know what, it really comes down to, sometimes for buyers, it's social proof. And if somebody else is putting an offer, and that's why you see these properties that get 17 offers, it makes absolutely no sense to me.
I
However,
know.
I'm very close to the real estate market, so I understand that part of it. But as a buyer, a lot of times they want to know that somebody else is interested. Like, and that's not how you win in real estate. It's just not how you win.
Yeah, I mean, think about it, right? Because like what happens as soon as a buyer is going in to make an offer on a property, and I've seen it with myself, but I've also seen it with other clients that I'm working with. As soon as there is another buyer on the property, things change, mindset changes. It becomes like dog eat dog kind of, but you see it automatically. It's kind of just like, as soon as another person is interested in that property, even if it's been sitting on the market for 70 days, it automatically makes you want to have it, right?
It's true. It's true.
It's like what happened? Somebody
And
will be, five people will now make an offer on that property because one has been registered.
that's
So
right. It's so true. I can't tell you the number of times when we have a listing and an agent will call me to ask questions and I say, is your client interested? And they'll say, yeah, but just like, let me know if you get another offer.
yeah,
And I always say, why? Like, oh, they don't want to put in an offer, but why would you want to wait? If they're interested, put the offer in. Don't wait for another offer and then put
yeah,
it in.
don't you
That's
want to be the only offer on the table? That's where you have the best
right.
negotiation, right?
But that's what people want is they want to be the only offer, but they want there to be other offers, if this makes sense. So they want there to be other offers, but they want to be the one that is able to negotiate right now. So
Yeah, no, of
you guys
course.
now have to wait. That's what they want,
They
right?
want, I feel like they want the reassurance that they're doing the right thing. So there has to be
Exactly.
another offer on the table. It's just funny. And to be honest with you though, like I did it too. Like I get it. There is something different. I mean, listen, we're in the,
Yes.
in the field, right? Like we
Yeah.
see it from a different lens, but also as a consumer, when you are kind of like in the in the nitty and gritty of like actually making an offer, it's you become a different person. You really,
Yeah.
so it
Well,
isn't, I
yeah.
mean, you've also represented me once. Uh,
Yes.
so
Yeah.
like, I also like I just clearly remember needing that extra support of like, hey, like you are doing the right thing,
Yeah.
even though I knew my numbers, and even though like it was like there's a sense of like, you're scared, and but am I doing the right thing, and why isn't there no other offers? There must be something wrong with this property, and this and that and the next, and it's like you're fighting yourself, right? So I mean, I can tell, I can tell the other buyers that I also relate, and when they're going through the process of the pre-approval, it's almost kind of like, listen, I always say, have a good team, because you definitely need
Yes.
somebody that's level-minded to kind of talk you back to, ground you when you become a little bit nervous. But also I think brings me back to the importance of also like be prepared when you're walking in and making an offer. The more you're prepared, the more confident you're going to be. And yeah, just block out all that outside noise, block out the media and the fear and all of that, because you're right. Like, I mean, if you just bring it back down to focusing on your goals, your
Yeah.
plans, your life, what you need, and if you have the cash to purchase something in a market like this, I think, like you mentioned, it makes sense.
It does. Yeah. It does make sense for sure. I just want to go over some numbers that I have. Just quickly, and we won't get too deep into the weeds here because it can get really dry. But basically, the when I look at the numbers and did the latest rate cut make a difference? So it did in terms of the numbers picking up. And the prices even lower, even with lower rates, average prices stayed below 2024 levels. So the prices haven't jumped up a lot, which makes perfect sense. But the sales did pick up with the Bank of Canada rates. And so you asked about like where are the opportunities, what would I tell a buyer right now? So where would the opportunities be right now? I think the opportunities from looking at some numbers are basically a lot of it's in the 905 area. The 905 regions is where the biggest opportunities are, especially for move up buyers. So if you're selling and moving up to something, there's opportunity there, because what will happen is, and especially what will happen over the next couple of years, is as more first-time buyers come in the market, those prices tend to jump up, and the other ones take a longer time to jump up, right? Because you have to have that flow of people moving up. So that's where I think where the opportunity is right now for first-time buyers, definitely, and also for move-up buyers. There's a good opportunity right now because the higher, like the detached are still selling pretty well, but the prices are not going up like crazy. So I think there's a lot of opportunity there.
Yeah, incredible. I agree. I think, I think the more like you bring a good point, like having, more stats and knowing kind of like where the opportunities lie are definitely utilize that as more of like a wealth tool, right? Like, hey, where can I make the most money right now, especially if you have some flexibility in regards to like the location that you want to be in, for sure.
That's important. That's important, right? And I think now there's more opportunity to get into a location that you want than there was before, right? Because when the market was really crazy, what would people say? People would drive until they qualified, right?
Yeah, pretty
You're
much.
just driving out to whatever area until you qualify, and that's how people decided on an area. Whereas now you have a little bit more control over which area you can probably pick the area that you want to be in. So I think that part's pretty important. But I do want to ask you a question about mortgages for, whether you're moving up and buying another house or whether you're a first time buyer. What's the biggest mistake or some of the common mistakes you see that buyers make when they do that?
When they are moving, well,
Or just during the mortgage process, like just during that process of getting a mortgage, what are some of the mistakes or the biggest mistakes you see people make?
I think the biggest one is not providing your documents for a pre-approval. I mean, I can count. I mean, I could tell you that there has been multiple scenarios where a client stated that they have been pre-approved. And then I asked them, have you provided all of your documents? And they said, no, that's a pre-qualification. That is not a pre-approval. Especially when you're actively looking at properties. I think it is important that, anybody understands that their idea of how much they make versus the lender's idea of how much they make could be very different because of the rules that are implemented on different types of income. So my big thing, and Sandy, you know this about me, I get everything ahead of time. That is my rule of thumb. I will not provide a qualification or a pre-approval without taking a look at somebody's documents, because number one, I do not want to overpromise, and number two, there is no room for error in this market, in any market for that matter. If you want to make an offer on a property, it is absolutely important that you get a pre-approval that is accurate. Updated documents, get do all the legwork ahead of time so that when you're making an offer, you're not going to be surprised if the lender decline, let's just say that you're not going to be surprised what happens with the mortgage financing, that you will receive an approval. I think that's the biggest mistake I see, that the not understanding the difference between a pre-qualification, which you can literally do online. You can pop online, throw in your, and say, hey, I am pre-approved, but really, no, you're not. So, I mean, listen, it's more work on our end, right? But I will never tell a client to go make an offer on a property without seeing those income documents. And if you are, conditional offer needs to happen because you are technically not pre-approved. So
that's
yeah,
important. Yeah, that's really
probably
important.
the biggest mistake.
So the easiest way to know which type you have is, did you provide your documents, like your bank statements, your NOAs, your job letter, whatever? If you didn't supply that, then you don't technically have a pre-approval.
Yeah. Have you, and it's funny, like even it's like, well, my branch never asked me for an employment letter. I have those conversations and I'm like, well, they will though. They're going to ask you for an employment letter at the time of when you purchase a property and you're going through an approval. So do you want to supply it now so that we can review everything to make sure everything looks good? Because I mean, one wrong word on that employment letter can change things, right? If you're not, let's say, for example, it says temporary on there, that changes everything. So on my side, like it's just so important. Like I can't stress that enough about making sure that if you are talking to anybody, you have given all of your documents.
Yeah. Agreed.
Yeah.
What would you say is the most important? Like people talk about rate, but the rate is not always, rate's important, let's be honest, right? But it's not the most important. There's other factors that go along with the rate that you need to look out for as well, right? So when you're comparing apples to apples and you're comparing, let's say a 3.8% mortgage versus a 3.7% mortgage or something, there's other factors to look out for. What would you say is the number one thing to look out for?
Well, there are some lenders that are offering super, 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 super low rates, but also have a bona fide sales clause attached to it, which means that you can't leave the lender unless you sell your property. Like,
At arm's length,
uh,
at arm's length.
that's right. So, I mean, I think the biggest thing is, yes, like you can search online for the lowest rate available and they will give you the lowest rate. But unfortunately, those lowest rates are never like, it's never in the full front of discretion that you can get this rate, but you also have all of these additional stipulations attached to it. And as a normal consumer, you wouldn't even know what any of this stuff means, right? You think that you're just signing for the best rate available, and then you get a big surprise at the end of the day, right? So I think that's kind of the biggest thing between what the lowest rate could be on the market versus maybe something that's 10 basis points higher. Now, do you want more flexibility and some more freedom for 10 basis points higher? Probably yes.
Yeah.
Right. So I think, just trusting the lender, trusting whoever you're speaking to, doing your own due diligence. I think it's not all just about the number. There's way more to it.
Yeah, because the problem with that is you wouldn't even know whether you wouldn't know what questions to ask, right? And I've had clients who have had a mortgage like that and couldn't sell the property. They couldn't refinance the property. They had to sell it and it had to be an arm's length sale. And I've had clients in the past who've taken cashback mortgages, which turned out to be an absolute disaster because if they wanted to sell the property and this particular client was in financial difficulty and the penalties on that and having to pay back the money and the penalties, it left them underwater. It's really sad. It's actually really
Yeah.
sad.
I think like, there's a lot of like cherries that are just dangled in front of people, like specific to, okay, yes, a cashback. Now, just be mindful that if you don't stick out, like you mentioned, that cashback is not yours.
Right.
That cashback is still the lender's. So if you switch for, maybe a lender has a rule of you also need to have your monthly mortgage payments deducted from one of their bank accounts, like
Mhm.
RBC savings accounts, Scotiabank, whatever account, right? But then you change it. Well, there goes your cash back. Like there's so much to it, right? Like you have to fully understand, like a lot of this is just, it's not free money. So I think having the knowledge, the support, the understanding, and hey, it may very much so work out for you. And and we all hope that it does. And yes, obviously having the extra money can absolutely, be beneficial, especially, through all the moving costs and all the additional extra expenses that will occur during a move. You have to look at the bigger picture of what is your goal, what is your plan, how long are you going to be here, because this may not actually work into your favor.
Yeah, because you know what, you may hear the lender say, we'll give you this low rate. However, you can't um you have to sell, like they're going to put it a different way, right? Like, and you may think, okay, well, I'm not planning to go anywhere, but life changes sometimes, right? What happens if your job, if you get a better job offer, or you don't have kids and then suddenly you're having kids or whatever. A lot of things can happen within that time, and that's why I think, especially with new builds like pre-construction condos, that's what happens is people buy them and they get possession of them 4 or 5 years later. Well, we don't know where we're going to be 4 or 5 years from now. Right? You
Yeah.
may be in a whole different situation and may not be able to close on that or may not, it may not be the desirable property for you. So I don't think it's always, obviously people have to look at rate, but I think you need to ask yourself, if this rate is so low or way too good to be true, why is that? Like, what are the other things that go with this? Because let's face it, the banks they are the number one businesses in Canada, right? They make billions and billions of dollars, and they are very good businesses, very well run businesses. And they're well run businesses because they know how to make money. So when they're offering you something like that, you have to find out why. Why is it so low? Because it's important. These are I've seen people that can't sell because the penalties on the mortgage, they got a good deal, and then the penalty on the mortgage is so high that they can't sell because then they're underwater or whatever. So you have to ask these questions. So that's where the importance of a mortgage broker comes in, where you can explain that stuff to them, right? Where you're not tied to that lender. You can explain, this is the situation, but this is what also what goes along with this. Whereas, you know, if you go to a butcher and you ask a butcher, should I eat vegetables or should I eat meat? The butcher's going to tell you to eat meat. He's not
Hey,
gonna
I
say you
will
should get
tell you,
yeah.
are you comparing a mortgage broker to a butcher?
No, not at all. But what I'm
I'm
saying
just
is,
kidding.
right? If you're talking to Scotiabank, then Scotiabank's going to tell you that their product is the best. They're not going to, they're right. They're going to sell you their.
No, you know what? I think what I always say on my end, listen, I work for my clients. I don't work for the lenders, number one. But number two, honestly, and you know this about me, Sandy, I am always here for a conversation. And sometimes I have a conversation with a brand new client that has something on the table that is actually really good. And
Yeah.
usually, if it is really good, I say, that is an incredible deal. Continue on with that.
Yes.
Because to me, although yes, I'm running a business, and yes, of course, like, money matters. What matters to me most is my morals, being ethical, and my job is to give my clients the best advice possible. That's
Yeah.
my job. And sometimes that means stick with what you got on the table. But I am here to help have those conversations with the clients if they don't feel supported, right?
Yeah. It's the long game, right? If you've ever read the book, I think it's The Infinite Game by, I think it's Simon Sinek who wrote it, The Infinite Game. Anyway, yeah, it was. So he talks a lot about that it's, and that's exactly what you're doing. And I know that to be a fact because our clients are always well represented when they go to see you. And I know you have told some of our clients, hey, listen, that's a good deal. Just take it. And why? Because you know that in the future, that person is going to come back to you at some point. If
Yeah.
you know, they also,
And you can only hope. But like,
well,
honestly, I think I've been doing this for almost like a decade. But I never like I always stick by the same thing. For me, if a client is in a good position, that means more to me than if they were to work with me. If I can give them the right advice and they are happy, that means more.
yeah, I know that to be true. I've seen that in action for sure.
Well, thank you.
Always great talking to you. I'm not going to keep you here all day, so it's always great talking to you. And we'll talk again. We'll probably do this again in about 6 weeks, where we can talk about the market, see what's going on, yeah, and continue to go from there. But in the meantime, we will put all of your contact information when we post this. We'll have all your contact information, and honestly, I invite anybody who has a question about mortgages to call Monica. I know for sure that's why we love dealing with you, because if I have a client who they're not sure whether they can buy now or they're not sure whether they want to buy now, I never hesitate to get them to call you, because I know you'll have that conversation with them and help. Like, you have the same philosophy we have. Just give people all of their options and let them make the best decision for themselves right now in this moment. And you always do that for the client. So if you're listening to this and you have questions about a mortgage, especially even about, what I love about you is that if there's people who are thinking, I can't buy right now, but I do want to start getting into this and learn about it. How do I go about it? What do I do? What should I know about my credit score? All that kind of stuff. You're happy to lay that plan out for them. And so are we, to lay that plan out for them. Like, how do I go from here to where I want to be in a year or whenever, how long till I can buy a house? So I invite you to call Monica and go through all those steps with her, and she will gladly help you.
Oh, well, thank you. And ditto to all of that with you and your team. But sincerely, always a pleasure chatting with you as well. And looking forward to connecting again and doing this in 6 weeks' time. And let's see what happens after the fall market.
Amazing. Yes. Thank you.